What's up, everybody? Your boy, Mr. Dynamics FX, the one and only Mr. Do Good. Man, I'm back again with another one. So today we're checking EURUSD. Before we go any further, please, guys, like, subscribe, and turn on the notification button so you can know when the boy drops another banger. So let's go straight into it, guys. So we're checking EURUSD. So what we have here, guys, I just want us to push it slowly but surely, right? So I want us to identify this zone because it's very, very important, guys, to identify strong zones so that we can know where we're going, all right? So you can agree with me with that this is our strong area, which was this one initially, right? The market pushed down, came back and retested this level, went down, gave us a huge movement to the downside, right? Meaning this pullback produced this huge movement to the downside, meaning here it's a high volume area. So the market also, when it came back here, it also pushed down, right? And then the market, when it came here, that's where the market it did something, break out, break in, break out, right? But in these areas, the market was supposed to, since it broke in, right? Then came back to retest this level, it was supposed to push down like this, right? But instead it went up again. Do you understand? But then interestingly, the market created something on this area, an M pattern, guys, which is a double top, right? It created an M pattern. It's also a double top. But the reason why I identified this area here, the reason why I identified this area, it's because you guys, I wanted to show you in this area, the market was supposed to go down. But because the market makers, guys, they know that you're gonna sell the market here. So they must manipulate you a little bit. They must push the market up and down so that you know what? You can say the market now it's a buy so that they can take your money. Right. So, but then now the market is created an empathy, which is a confirmation that the market is going down, right? So we also wanna put it here, as you can see, gonna identify this reversal pattern here. You see, we have a reversal pattern. There is something that I want to understand. I want to explain. A lot of people have been asking, right, or they have questions of like, but we usually, when we have this thing, we usually wait for the dead touch. Meaning we have the first touch here, right? Second touch, and usually we'll be waiting for what? We'll be waiting for a dead touch here. Then you find that the market is not reaching out for what? For the dead touch. Reason being, guys, it's not always the dead touch, right? In these situations, you find that the market, that's why it's very, very important to be conscious on the second touch, all right? Because now you find that the market, instead of going for the dead touch, it creates an M pattern, a double top. Do you understand that, guys? So we must be very, very careful. Don't cram the market. All right. So let's just put it here. This is our 90% rule here. Do you understand? This is what we have. The market, it is pushing down in this channel. And then we have a confirmation of a double, of a double top, which is an M pattern, meaning the market is going down. And then the market was approaching that strong area with what? With the reversal pattern. And remember, it's not always, the market will not always make a dead touch. Sometimes it make a second touch and then give us a double top or a double bottom. So always have that in mind, guys. Have that in mind. Don't always claim the market that the market's going to make a dead touch because it's going to disappoint you. because most of people will be waiting for a dead touch to come here, dead touch, then drop. And guess what? The market created what? A double top, and it's not wrong. So don't cramp, right? So since the market has created an M pattern, we have this neckline here. Sorry. We have this neckline here, which is this zone, guys. This area. If you can check a little close here, guys, the market has not yet retested this zone. Right, and currently we're on this strong area. Let's identify. So definitely we're gonna expect, because you can clearly see, we're gonna expect a push to retest this level, and then we continue with the movement. Do you see, guys? This is what we have. This neckline needs to be retested. Remember, this is our strong area. The market tend to be a resistance here, and then tend to a support here. Right, then the market broke this support, and then we expect it to come back and retest this level so that we can go down. Right, so let's go to H4 and actually see what's happening on H4. See what's happening on H4. All right, beautiful. So let's remove this a little bit. All right, let's zoom in. So now we have this zone here. Right, we have this pullback, which created this huge momentum to the upside. Right, meaning this is a very, very strong area of ours, guys. So let's remove this trend line just a little bit. Yeah. So guys, as you can see, remember we have a double top, which is an M pattern, guys. And then how are we gonna execute this one? Definitely this area here. The market was approaching that zone with what? With the reversal pattern, and with the first touch, the second touch, and the third touch. Maybe somebody's asking themselves, how are we gonna see if it's a double top or what, right? We see by this confirmation of reversal patterns. So confirming that, you know, we are going down, all right? So what are you gonna wait here, guys? I'm gonna give you tips here. Just wait for the market to push back to this zone. The market needs to retest this zone. But if the market doesn't retest this zone, guys, it decides to, because now we have to take an entry. If the market decide not to come to this area, guys, right, wait for the market to break, retest, and then push down. That's it, guys. Simple as it is. Keep it simple. Keep it very, very simple, guys. And then you come back here and complete the 90% rule. Let's put it back so that you can. Right, guys. So something like this. This is our neckline. The market needs to retest this level. Do you understand? The market needs, I don't put it like, right. The market need to come back here and retest this level, guys. Right. This is your first selling area or selling zone. Break, retest, take another entry, and let it flow. That's it, and let it flow. But let's say now the market doesn't come to this zone and it decides to push down, like impulsive. Don't panic. Wait for it to come back to this zone. Just wait for it to retest here, and then you can take yourself and move down with the movement. That's it, guys. Simple it is. Just keep it simple. Right. So let's go to GBP USD and see what's happening there. So on GBP USD, let's just start it afresh. So what do we have here, guys? A very, very beautiful, 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 beautiful. So guys, I want you to pay attention here. Right. So we had this point here. Gonna identify. This is our high volume area. Yeah, guys. Why am I saying it's a high volume area? Because the market pushed down with a huge momentum to the downside, and we're expecting the same thing to happen this side, right? And push down, right? Do you agree with me, guys? So then the market broke the structure with a reversal pattern, which is this pattern. Yeah, I'm gonna identify it. It's very, very important, guys. All right. So when a market decide to break in this nature, break like a strong zone, just know that the market it's going to push back down. Do you understand that? It's not always that the market is gonna reject at this zone that you say it's gonna reject. You understand? So we have these patterns where you find that the market will reject outside. Do you understand that, guys? I hope you understand me, guys. Remember, okay, let's start it afresh. You see this zone, guys, here. It's our high volume area, this one. So we expected, example, we expected the market to push. We'll just put it like this at first. Right. I want us to go. So at first, something like this, right? So we have the first touch, the second touch, and we're waiting for the third touch. And then the market was supposed to push down, to complete the 90% rule. Right. We agree. Exactly. But then because you know what, guys, because the market makers, they know that we're waiting for a dead touch. They know that. So now they decided to push the market up to take out our stop losses. And then after that, it went down. And then the question is, how were we going to see that the market is going to push back down? That's where, guys, it comes. I have a mentorship. If you want, the mentorship is available, guys. If you want to learn more about these things, just WhatsApp me on my number on the description, right? My number is there on the description. Just WhatsApp me. So what happened is that you adjust, you become reactive to the market. Do you understand? You adapt. So what we're gonna do, we're just gonna push the market like this. We're gonna remove the trend line, not push the market, but adapt and say no. The market is now decided to create another movement. So we need to be reactive to the market. So now this is our first touch, and then this is our third touch. And then meaning we're gonna have our this is our first touch, this is our second touch, and then this is our third touch now. Do you understand? Meaning we're still gonna take it here and push down. Right. Meaning initially here it wasn't remember when we had this one, it was our first touch, second touch, then third touch. Meaning, okay, now we need to be reactive to the market and say this is our first touch, and this is our second touch, and this is our third touch. It happens, guys. Remember, we don't control the market. We use tools, right, to predict the direction of the market. So if the market decided to know, I'm not going to use this one as a second touch, I'm going to use this one as a second touch, then we need to be reactive to that. We need to adapt, do you understand, to the new structure of the market. And this is how we adapt. Firstly, we said this is our second touch and this is our third touch. But the market disagreed with us and said, no, you are wrong. So we said, okay, fine. Since you say that, now we're going to make this one our second touch and wait for the market to make what? This dead touch, meaning this is going to be a dead touch. And then, of course, it then went down. It happens, guys. Sometimes as traders, we become wrong. Do you understand? But then the most important thing, we become reactive to the market and take the trade. Do you understand? So now, as a person, you need to be reactive to the market. Don't just say the market needs to be reactive. If the market says no, this is not the second touch to game it is, then accept it's not, and then become reactive to the market and not be predictive but be reactive. So then this is our first touch, this is our second touch, and this is our third touch, confirming that we are going down to complete our 90% rule. All right. So now let's go a little bit deeper to 4 hour and see if we can get any entries there. All right. So we have this zone that we're going to identify here. Let's identify. All right, so let's remove this so that you can identify it clearly. This is this zone. Oh, let's push it forward. So guys, in this area, we have no zone where we can sell the market or buy the market. Here, there's no strong areas that we can say we can sell the market or buy the market, right? But we have major zone, which is this one, and we have this one. Resistance, support. We buy on a support, we sell on a resistance. So what we're waiting for, if it happens that the market comes back here, then it's going to create what? A double top, and then we take the market, we go down. Or what's going to happen, the market is going to push down to this area, right? And give us a confirmation of a buy, and then pushes up here, and then pushes down, right? Or this is the last one. Or the market will decide to just push and then just wait for a retest here, right? And then continue with the movement. So basically something like this, like this, like this. It's more like these guys. All right. But then what I believe is going to happen here, initially, the market, I think, is going to come back again. It's just going to push down to this area, give us a buy, and then we push down. All right. But I've shown you every move, right? Because we need to be reactive, right? And have, you understand? So that the market cannot catch us unexpected, guys. You understand? We must always expect everything. So we expect the market to come back in, pushes up, come back to this area, and then pushes down. Right. Or the market is just from this zone, just push up like this, go down. Right. Or the last one, where the market is just gonna push and then come back to this area. All right. So this is your selling area, and this is your selling area. And this here, it's gonna be your buying zone, maybe when it comes here. So I will advise you guys, to not trade here. Do not trade, just let the market to come to this zone and then have a confirmation if the market is gonna buy or it's gonna break. Do you understand? Here we are selling, here we're gonna buy, but if it breaks, wait for a retest and then sell it. Thank you for watching. Thank you for choosing my channel, guys. If you want to learn more about this strategy, mentorship program is available. My numbers on the description. Your boy, Mr. Dynamics FX. God bless you.